Hey everybody, welcome back to another live stream. Before we get into the show, which will begin in a moment, I wanted to let you know that if you have any questions throughout the stream, remember you can always ask them on our website. We have a live chat support ready and able to help you. My team there is available if you have any questions about any of our products, services, or just have a question for fun. Check it out. Link will be down below in the description.
The stream will be starting shortly, but while you wait, you can check out our sponsors 8cap, Forex Tester, and Superfunded. You can find the links to them down in the description below.
Coming to you live from our studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Good morning, everybody, and welcome back to the show. Thank you for being here, and hope everyone is doing well. We are back on the charts for another week in the markets, and this one is a busy week too. Last week was busy. We had, of course, NFP. We had the Fed funds rate that came out, and of course, the forward guidance from Jerome Powell. It was a very, very busy week. And this week, we have some interesting stuff as well. We have CPI coming out. And in fact, we should take a quick look at the news here. We are down a man here in the office. So we are, James is taking 100% control of the producer side for this week. So I'm going to have to be our reporter. We will miss James, but we'll see him back, of course, next week. And you guys will see him on other areas like the A1 Trading YouTube channel. So let's look at this week. I want to just real quick cover what's coming. So for Forex traders, for stock traders, for indices traders, for all of us, this is probably the biggest piece of information, I would say, of this week. This and PPI. CPI year over year is coming out on Wednesday at 8:30 a.m. U.S. Eastern. We will be live for that event. We'll be discussing CPI. We'll be talking about the numbers. And this number, in my opinion, is probably one of the most interesting numbers to watch. It will cause some serious volatility. And when I say serious volatility, I'm talking about 50 pip moves potentially on dollar crosses. If you're looking at gold, you might have a couple percentage point swings, right? You have the serious potential for volatility on that CPI event on Wednesday morning, but also the party does not stop there. We have the bank rate decisions coming out for the UK on Thursday, expected to raise by 25 basis points. And of course, in terms of PPI and core PPI, we get numbers for that on Thursday. This is the producer price index, and it is very important in terms of studying inflation. In fact, if you guys, for the people who have been paying attention to the live streams a lot, you know that PPI recently has caused some substantially bigger moves, even in some cases, than CPI. So both of these are very, very interesting. They're very, very market moving, and we will be here covering it all for you guys on the YouTube channel. If you guys are enjoying what you're seeing here, if you want more of this, if you're an aspiring trader, if you're learning, if you're improving, if you're struggling, make sure to subscribe to this YouTube channel. It's completely free to do. Make sure to hit that thumbs up button, and let's dive into the charts here for this week. Starting out early May here, we are already well on our way. Second week of May. I guess this is this our first full week of May? This might be our first full week of May. I'm looking at my calendar really quick. Not that it's too big of a deal. Well, actually, no, last week was well, barely. Sunday was April 30th. Regardless, we're going to be taking a look at some charts. I want to show you guys, I like to start out where I am usually positioned, just because, again, when it comes to trading, live streams, I like to show trades. I think that it makes the stream more interesting, but also, you know, if I'm selfish for a second, part of the reason I love being a content creator is because it keeps me very, very on my game when it comes to trading, because I have people watching me, right? So I trade my strategy pretty tight because I know that I can't go around slinging, sluggers when I have people watching my every, stream. Anyways, I'm long gold. I picked up gold last Friday on the big sell-off that occurred. I still think that there is potentially some shakiness around the regional banks here in the United States. I think that could continue to cause movement to the upside. We saw a big rise off of fears of more banks going under. We know that to be sort of a story. We also sort of have this ebb and flow of potentially seeing the Federal Reserve on the cusp of sort of a pause here. Now, of course, we have the June meeting coming up, which we just had the May meeting. The June meeting will also be interesting because that will be where the Fed sort of makes a decision as to, are they going to raise again or not? Now, to the dollar bulls credit, one thing that they said that was kind of interesting, the dollar bulls credit that was sort of intriguing, was that on Friday on Wednesday, we had a bit of a pop on the dollar in some argument for the idea of, well, hey, rate hikes were supposed to be paused going forward, but we didn't really get that language from the Fed. So there was a little bit of that. In terms of the dollar here today, the dollar is trading underneath this key level of support. So we sort of have to acknowledge that this is now potentially supply, though it's a choppy chart here. And I really don't love the way this level has no longer sort of been so clear. We've just been incredibly choppy around this area. So if I'm being honest, really, this is sort of a soft level of resistance. What will be more telling, I think, for dollar bulls or bears would be to see if we're actually able to break out to the downside, which would be great for my gold trade, right? So I'm long gold. I told you guys that. I picked up gold on Friday. If we're able to see sort of a breakout to the downside of the dollar going into this week, I think that could really impact my gold trade in a positive way. And price action does seem to be sort of trending to the downside when looking at the dollar. So yeah. Good morning, Nick from Philadelphia. What's up? Where are you guys tuning in from, by the way? Comment in the chat real quick. Where are you watching the stream from? What's up, Jason? Jason says you should look at my platinum trade. What is I can't even remember platinum's symbol. I barely ever look at it. XPT, that's right. XPTUSD, look at that. Nice trade there. Jason, that's awesome. A little bit of a breakout to the upside here, right? Looking a very clean breakout. These are, I love these sort of setups, by the way. I love when you get that break and then possible pullback plays, just looking for continuations. This is what you would kind of call, like, you had the stairs going down, and now the question is, are we going to start seeing the stairs go up, right? Simple price action concepts. Platinum's been an interesting one, Jason. It's been on the EdgeFinder for a while. I know you have the EdgeFinder. Of course, we met in person at our last seminar event, and you ended up picking up the EdgeFinder, which is absolutely fantastic. Speaking of platinum and speaking of assets that we've been watching, let's take a look at the latest in terms of COT data here. Of course, we love to do this on a Monday. Wow, look at all the different places: Jamaica, Pakistan, Romania, Germany, South Africa. Wow, Jamaica, Bulgaria, India, South Africa, Hong Kong, Texas, Nigeria, UK, Phoenix, Arizona, Dubai, Germany, Nigeria, Tallahassee, Florida, Texas, UAE, Uganda, Jamaica. Wow, so cool. Thanks everybody for being here. We are, for those of you just tuning in, we are now taking a look at the COT reports. Of course, we get this data, guys. We get it on Friday afternoon. So Monday is usually, in my opinion, it's a great time to just sort of catch up on the latest in terms of where we're at COT-wise. And so what we have here is we have a couple assets here that are marking our top buys, if you will. So we have platinum, we have oil, which is intriguing, right? Oil's been getting killed. Now is actually off the lows, though. It's been having a nice rebound. You've got the euro and you've got gold. So what am I talking about here? Well, these are the assets that institutional traders, or smart money for what we call them, smart money is very long: platinum, oil, euro, and gold. And this is not my opinion. I'm not trying to guess what they're doing. right? Sometimes people are trying to interpret what smart money is doing through chart candles. I personally don't really believe in that. I'm more oriented towards looking at what we can actually tangibly see. The COT report record is what institutional traders are actually doing, right? You have gold, euro, oil, platinum, right? These things are more heavily bought. Well, flip it around, guys. We could see that on the sell side, we've got SPX, US 10-year, CAD, and JPY. These are our most sold assets. What sticks out to me is that the Japanese yen continues to be a very bearish asset. So how would you use that information? What good is that to us? Well, if you know that institutional traders are long a certain asset, institutional traders typically are the most professional in the industry, right? People give them their money to trade it or to invest it, or banks are speculating with the data that they have in front of them. So they're more equipped than the average person out there. So when they're buying something, I generally put more weight to it. And when they're selling something, I also pay attention to that as well. So in my opinion, part of the reason why I'm so bullish on gold is because a lot of central banks are actually buying gold. You also have lots of hedge funds going long gold. So it's an interesting component there to pay attention to, and part of the reason why I continue to be long gold. One thing I got to bring in Frank and I do this each week. We take a look at the COTs, see if there's any record change. We'll say hello to Frank. What's going on, Frank?
Morning. How's it going?
So, have you seen the? Have you looked at the COT reports? It's an interesting move here.
I have, yeah. So the one thing that caught my eye was gold.
Yeah.
Last week it was kind of mixed because they were, going back and forth between increasing and decreasing on the long and short side. But now it's more so a clear direction of where big money wants to go. And so it's looking promising for the metal. And, my initial mixed sentiments now leaning more towards the bullish side. And I'm honestly kind of looking at some potential long trades here this week.
Yeah, gold is looking really interesting. So what Frank is talking about is in terms of long contracts, not only do we have a heavy preference for the long side from institutional traders, but on top of that, we had a really big, a pretty sizable increase on the long positions. Now, what you see here, this is the number of long contracts versus the number of short contracts open on the futures market reported to the CFTC through the COT reports. I know that's a lot of words, but basically it's tracking what contracts were being bought, what contracts are being sold. And what we see here, what Frank is talking about, is that you actually see a shrink in the number of short positions opened and a growth, an increase in the number of long contracts open by professional speculators, if you will, institutional traders. So it's an interesting change here going into this week. You also have on the other side, you have the yen continues to be sort of an interesting one, though this one, Frank, I don't know if you saw the yen pretty much lots of longs and lots of shorts changed.
I mean, net positive, I guess, in terms of change, but it's still the most heavily shorted asset on the smart money tracker. So it's not really anything I'm looking at right now. I still have a short bias for it overall. And plus the BOJ a couple of weeks ago was just incredibly dovish. So still short bias.
Absolutely. Yeah, absolutely. I think that's it's a little bit of concerning, with the Japanese yen. I like the yen pairs on pullbacks. We talked about that last week, and in a second we'll bring in Ivan to talk about that. But before we do, right before Ivan comes in, let's run a quick commercial break. We're going to hear from one of our sponsors who help make this show possible. Check it out. We'll be right back after this.
Attention, A1 Trading Show fans. Are you looking to get access to the EdgeFinder for free? Our partnered broker 8cap is offering fans of the show 100% free access to our trading software. To get your access, all you have to do is click the link down in the description, sign up with 8cap, deposit $1,000 or more into your personal trading account, and then just let us know and we'll get you hooked up with the EdgeFinder. 8cap is a regulated broker, offers many assets to trade, flexible leverage options, and has amazing customer support. Click the link down below to get started, deposit $1,000 or more into your personal trading account, send us a message when you're finished, and we'll get you the EdgeFinder for free. Now, back to the A1 Trading.
There you go, guys. And yes, make sure to check out 8cap down below in the description. And their big thanks to them for helping us to make this show possible. So let's bring in Ivan. We said we would. Let's see what's going on with Mr. Ivan FX.
Hey,
What's going on, Ivan?
It's all right. It's alive.
What's the weather like in Kenya right now?
Oh, it's sunny. It's been raining and raining and raining, and now it's finally sunny because I came on.
Yeah, it's been rainy in the United States as well. Well, where we're from, at least. We've been. It was like a rainy weekend, so not so rainy compared to, I guess, the gold market, which is shooting up here today. Frank and I were just discussing the COT showed a nice little increase there in institutional interest. Do you have any thoughts on the gold market, Ivan?
Is that what you guys paid me for?
Yes. Whatever, we're paying you for your opinions here on the gold market. What do you think?
Okay. So you pay me in gold diamonds, right? I would say that increasingly that it fell pretty hard on Friday, so that kills any bullishness in me though. But yes, it goes a bit higher. But I think until it breaks 2060, which I believe is absolutely not going to happen anytime soon, then neutral.
Really, you don't think we could take out those highs?
We went to 2085 and we are lower. Why? That is an exhaustion. That is, well, just technically or practically supply and demand. A lot of people has been taken out by that one, mostly because we haven't gone higher. There has become more demand. And how do you know there's more demand? That we go above 2060. Now, is this a good price? Not necessarily, because we went all the way down to 2000. And if you're supposed to hold a continuation of bullish trend technical analysis, we should have held 2025. We should have held those lows minimally.
Yeah, that's true. And to your point, so let's take a look at our retracement here. So 2025 is just around the 50% retracement. To your point, I mean, we did have a pretty steep sell-off, and this was sort of kind of the idea of rate hikes are not off the table. When that got thrown out, the gold market really took a nosedive, especially with some of the regional banks rebounding really strong on Friday. So it's an interesting take. I'm still bullish. We'll see if I'm right about it. I've got my trade on, Ivan. If you just talked everyone into selling their gold and you stop my trade out, I'm going to be really upset with you. So, I'm coming at you with that. But it's okay. That's why we have this show. We have different opinions, which I like. So,
Hey,
Ivan, what are you looking at this week?
I haven't said anything wrong about buying gold. I said, if we're going to continue bullish, not sell. If we're going to continue buying, we have to have prove that we're actually going to go higher.
Fair enough. If it does break those highs, then we would probably, I mean, if we break those highs, we'd probably all sort of, from a technical analysis perspective, be pretty convinced. But again, I understand there was a lot of sell pressure that came in over on that Friday move. So we'll see how it develops. Ivan, what are you watching personally? Still looking at NZD pairs?
Yeah, you can see my screen before you shift, don't you? No, I'm just told by Altech to look at Euro New Zealand, and I wanted to buy this one still, as much as it falls. But yeah, it's currently bearish and really fantastic. Buy. So yeah, I'm in my seasonality kind of world. So in now my different world, even though I can see euro going higher, pound going higher, everything is dollar bearish as I've expected it. But New Zealand was supposed to go bearish, so I'm still hoping and praying. So that is Euro New Zealand.
Show us your.
Yeah.
So you said Euro New Zealand. What about Euro New Zealand? Are you looking to be a buyer? Looking to be a seller? What are you thinking?
Yeah, buy. Yeah, I'm thinking I tried buying it. Well, I did buy it here, and I'm like, well, that's bearish. We all can see that there's nothing, you didn't be a rocket science for that. I just needed to make a new higher high above 75. And then I can be rebound. Okay. Until then, I have a vacation. Cheers.
Fair enough. Frank, what about you? What do you, so you mentioned... You mentioned gold. What else are you watching, Frank?
So I'm also looking at pound, just because of the bank rate statement coming out this Thursday. Just looking at the pound dollar on the daily. So it's hitting like some pretty good resistance here. Could be a double top, but I think going into Thursday, it's probably going to be kind of bullish for the pound at least. And once the announcement happens, it's kind of chaos from there. But, maybe sentiment will pick up this week and they'll start buying into the pound more. So I'm kind of bullish bias.
So would you be looking for a break and retest kind of entry, or are you looking for a pullback? How would you play pound? Because I agree. I mean, I'm generally more bullish on the pound than the dollar at this time, due to, Ivan made that point last week. We discussed a little bit about their very high levels of inflation. How would you be looking to enter a market like that?
Well, either or. A pullback from this high would take us down to, I don't know, probably the 1.258s. That would be a decent, I think, entry to the long side, because you can have a tight stop from there. And then if you wanted to anticipate or kind of wait on like a break above that level, which looks like the 1.26s, would be, something promising. And you can, I guess what I like to do is I like to trade breakouts a lot. So I know you like to wait for the breakout and retest, but I think I like the momentum from a breakout. So even if it does come back and retest, like, you can always re-enter. So I kind of like that play.
Right.
So either or.
Yeah, and there's just different ways to play the same move, really. I mean, if you're a breakout trader, you're a breakout trader, and as long as your stop loss is in place, sometimes the break happens and it just never comes back, right? And those are actually, to play devil's advocate against my own style of entry, those are the types of moves that usually continue the best, right? They just go and they go and they go. So especially great for trailing stops. But I just personally prefer to wait for that retest, because I feel that I can sometimes get a better risk reward. But like you said, sometimes it's worth the initial try, and if it pulls back, you could still re-enter and get that second try again. So very cool. So yeah, pound. And Frank, I'll show you guys, for those who were not in the stream with us last week when Ivan was discussing it, we talked about inflation numbers for the UK and comparing them to sort of the other majors, majors, right? Looking at the European area and looking at the United States. In terms of inflation, what we've seen is that the UK, and Ivan, I'd love to get your, what we're looking at, right? We've got inflation between the UK in red, Europe in yellow, and US in the blue. Paint us a picture in terms of the euro, the pound, the dollar. What is happening here?
Well, let's say it this way. With 10% inflation, 10.1, which is the latest one, it is definitely more difficult to rent, more difficult to have a nice living as we used to. Well, you have now Europe, have America that is peaking that, but there's still elements of the society or the economy that still has gone like 20, 30, 40% up for the past year or the past years. So in that sense, people still feel inflation, even though it comes a bit down. It's more like a statistics for generally, because it's still very much higher prices of cost of living. And unfortunately, that leads to more suffering and leads to higher interest rates, which is necessary to be increasing, and for us to get down this inflation, and it has to be more expensive to buy stuff. So it's actually quite sad. I would say quite sad that pound is back up again at 10%. Nobody wants it to be at 10%, but especially now we're going into summer, we should at least have some reduction in some the key drivers, which is food and electricity. But right, we have to see.
Yeah, no. And so the thing is, Ivan made that point about interest rates, right? At the end of the day, currency traders, especially, that word is very important. What the central banks decide to do with interest rates, which we do have, of course, on Thursday, the UK Bank of England will be reporting their rate decision, but also, just like the others, potentially forward guidance on what they see it going. And almost certainly, when you have such high levels of inflation, fundamental traders know that this often leads to strong trends. And we learned that as a community, myself included, watching firsthand with this dollar move that we saw in 2022, where interest rates had to keep going and going and going. And the dollar was that safe haven. It just kept going. Well, now what we're seeing is that there's sort of a pause mentality from the Fed. The market is sort of calling for, hey, we might be sort of on the cusp of just pausing rate hikes. Whereas you've got the UK still struggling with double-digit inflation levels, which are going to continue to push, in my opinion, and Frank as well. The pound is poised to go higher, I think. So I personally like the idea of pullbacks on the pound. Frank made that point of 1.258. Right. So 1.258 comes in right around here. So I like that general area as well. So I'm watching for pound pullbacks. I really like it against the yen personally, especially, in terms of central banks. You sort of have, at least from what we can tell here, the UK seems to be very hawkish. You've got probably next the European area, and then you've got the US, and then of course you've got Japan, which has come out and openly even been dovish. So it's an interesting dynamic. And so if I'm trading that, I generally am going to be looking for the most hawkish, the most dovish in terms of central banks. So pound against the Japanese yen might be an interesting one. And Ivan, you talked about pound yen. What's the update there from last week? Maybe we can see your chart on pound yen. Do you have any thoughts there?
Well, it was supposed to come a bit down, I remember, and it just went. That was my trade plan. I knew how high come back to support, and it kind of never did so. So that was the direction, at least, correct, but the entry was never there. But definitely once you start breaking that high and those highs, we are short-term bullish in this little area here. But when we come up here, we are now facing resistance. So I don't want to buy it here, but I definitely would like to some kind of like that, so I can get a better price on British pound, Japanese yen.
Sure. Yeah, it's an interesting one to watch. And I just want to take a quick second, then I'll ask Frank about his yen thoughts. Guys, we are doing a Bitcoin giveaway, and James just dropped the link in the chat. If you guys want to join our $500 giveaway, we are giving away $500 in Bitcoin right in front of Ivan. You can see, again, we are doing $500 in Bitcoin. All you have to do to enter the Bitcoin giveaway is click the link. It's going to open up a chat where you can connect with one of our team members here at A1 Trading. Again, to get into the giveaway, all you have to do is, well, actually, sorry, James, can we put the talk to on there? Sorry, that's my bad. The talk to should open up a live chat. There it is. Use this link to enter. This is the one to click. So click this right now. It's going to open up a live chat right there. And then this is what it looks like. I'll just show you visually what to click next. So you go here, you click talk to, and that link will pop up like this. Just start a conversation, put in your name and your email, and click like VIP or tell me about your discounts. Doesn't matter what you click. It'll connect you with somebody, and they will help you get added into the raffle for the $500 Bitcoin giveaway. And that's just a big thank you to you guys for supporting the content. So Frank, Ivan was talking pound yen. Do you have any yen pairs that you're watching?
Yeah, so I'm actually in dollar yen and euro yen at the moment.
Okay.
The dollar yen, just because it's weak, but I think nothing's weaker than the yen right now. But I think my strongest bias would be for the euro yen. And that's mostly due to like smart money. That's what's been happening the past couple of weeks anyways, where a continued short on the yen, and then institutions they keep buying up the euro. So I'm looking at every pullback and trying to enter when I can and take these long setups.
Yeah, and just to go back to what you were talking about there, in terms of the euro and the yen, I want to just cross those on our smart money tracker here for a second. I'll show you this. Where's the euro? Here it is. Okay, so if we're looking at the euro against the Japanese yen here, what I find really interesting is that you've got a clear difference, right, in the institutional positioning here. So we have the Japanese yen has a very high short interest, and not only does it have a short interest, it has sort of a very starkly different short interest, right? 96,000 short contracts versus 28,000, and the euro, as you just said, Frank, not only is it a very large long to short ratio, it also just got bigger. So we just had 3,300 more long contracts opened up in the latest filing, whereas we had a shrink yet again in short contracts. Is this like the third week that we've seen that, Frank, in a row?
It's been happening for a couple of weeks now. So clear pattern forming. But it's cool. I didn't actually look, but they're exact opposite in ratios right now.
Yeah, it's very, very interesting.
Long, 23% short.
I love crossing them like that, Frank. You can just do the little drop down that we put in there, and then you can just select the ones you want. I mean, you can even look at other things. Also, guys, I think we had a mishap on the link. This is the correct link. If you guys want to enter that Bitcoin giveaway, click this link. Sorry, I think we might have cut it off. James, all good. Don't worry about it. There's the link for those of you guys who would like to join. Click it right there in the chat right now. That's right at the very bottom. So and maybe just to tack on a couple more things here while we're talking about it, we've got the pound, which I want to see where the pound is. The pound did have a slight increase in short positions here as of recently, as of the most recent reporting, but it's not a ginormous change. Still kind of 50-50 in terms of institutional positioning, but this is also a very big difference between where we were in terms of a couple months ago. A couple of months ago, the pound was like the most shorted asset on the list. It was really, really short. So now it's come back a lot. Now it's at like 50-50. So kind of interesting on that front. Let's take a quick look at retail sentiment also while we're on the EdgeFinder. And what we can see here in terms of retail positioning, you've got the pound, the Aussie, and the Kiwi. Retail traders sort of poised on the short side currently. And then on the flip side, you've got dollar CAD, dollar Swiss, dollar yen. Well, dollar yen's kind of 50-50. Dollar CAD and dollar Swiss very much are being bought by retail traders. Ivan, what do you think about dollar CAD and dollar Swiss? Do you think there's a bottom anywhere nearby?
Oh, I was still in the world of euro and yen in my head, but okay, fine, I'll take it.
No, go if you want to talk about that. Yeah, finish your thoughts on it.
Yeah, like I just want to because what is it, Stefano who asked me in chat today? Is like, I mean, like, why? I'm macroeconomics. Why? Why does things move? Why is COT so bullish on the euro? Why is it so bearish on the Japanese? It is, and why is COT so bullish, or why is it so bearish in either direction? It is because of monetary policy. It is because of ABCD reasons. Because Japan still doesn't have enough inflation. They still have a very ultra loose monetary policy where they're buying a lot of bonds, meaning they are adding a lot of their money to the economy, which makes it a very easy bet to just sell the yen. For euro, on the other hand, they have been for quite some time increasing interest rates, which Japan hasn't. They have had a lot of inflation that Japan didn't have. So there is two completely different economies and two completely different economic performances currently, and two completely different monetary policies at this point. That's why they are so different in COT data and in direction, generally going higher. But USD Swissy you might ask for, I would actually argue until we get a bigger difference in monetary policy, that's when we start changing again.
Yeah, so because that dollar Swiss
range or something in the meantime, maybe bearishness.
Yeah, it's been a tough move for dollar Swiss. trading from one at parity now down to 0.888, which is a substantial move on the exchange rate. So very, very interesting there. We haven't talked about indices yet. I want to cover my thoughts on indices here for a second, and then I'll ask Frank his as well. In terms of indices last week, we were all over the place. We continued to chop around. This is your daily chart. Here's your 4-hour chart. You can kind of see we continue to be stuck in between sort of a range where we saw a big sell-off towards the start of the last week, and then we saw continuation on the Fed meeting, and then we rebound on Friday. Frank, do you have any idea why we rebounded so sharply from that 40-80 mark? Is it just a technical move, or was there something that came out on Friday? Jobs numbers came out. Did you have any thoughts on that?
I mean, it did end up being kind of a technical move, but I think that it was a lot of the regionals or the financials in general just rallied from, the extreme sell-off from crashing regional banks, and that whole sector was dragged down with it. So that and energy kind of had a rebound Friday, and that was probably, just due to being oversold, and also that NFP came out positive, and they like good economic data. So I think honestly on the S&P, at least, it hasn't completed its move. It tends to make lower lows before coming up and making higher highs. That's what it's been doing the past month or so, and it kind of forms like a megaphone pattern. I don't really know what you would call it officially, what kind of technical term that is, but I see so price hit its lower low on that following trend line. It's probably going to come up, complete its move if it can to the somewhere above 4,200, and then probably just be range bound again. So nothing, no clear direction, but this is the pattern we've been seeing for the past month. So
yeah, I was going to say we've been very, very choppy. It's been the name of the game for, I guess, the last 6 months or so. Ivan, what about you? Indices? Are you a buyer or seller? Are you neutral? Any? I know you do your monthly buys in terms of long-term investing, but we're talking active trading. Anything stick out to you on the indices?
If you do some technical analysis, bro, I don't know what you see, but I see range. I see choppiness. I see undirectional. Somebody asked about some comments about regional banks, which again drives this. And to be honest and fair, it all depends on when is the next one going to fail and how far down are we going to go before we go back up again and even further higher. So I'm not saying I want another bank to fail, kind of a thing, but it would be nice to have a lower price to maybe get out of this range. It would be even better. But that's the reason for why we have this range. And until we get into clear water, whatever that is, that would be great. I just want a lower price, I would say. Boring, huh?
Fair enough. So if we break 4,200, are you a buyer, or would you, if some catalyst comes along, if we get maybe a dovish Fed or CPI comes out a certain way, a breakout of this level, are you a buyer of the pullback, or are you just staying out of it?
Oh, if you get a break higher, I will be happy as a wagging dog with a tail. Yes, I will buy the pullback if it breaks higher. Just anything that is not a range one, I would be happy with.
Fair enough. Frank, what about you? Are you this current level? What would it take for you to be intrigued for buys? Would it have to be a breakout into the 4,200s? Would that cause you to be a momentum buyer, or would you still just stay out of the way of that?
In this case, no. I would like a lower price on the S&P, just because of its range bound behavior. If it breaks above 4,200, by what I'm seeing and by the uncertainty in the markets right now, it's probably just going to come all the way back down. So I'm looking at lower levels. So the cheaper, the better. A breakout usually is something I like to trade, but in something like this, the stock market right now, I don't think I would buy on a break higher. I might be looking to the short side, or just wait for a discount.
Fair enough. Yeah, no, it's been a tough market to trade, and like I said, I'm kind of on the sidelines myself with the S&P. I haven't been trading it as much as I was last week. I'm out of the way of it, and I'm more intrigued right now just by watching the gold price with that COT data that we discussed earlier. I've got that gold trade from Friday. We'll see how that one wants to play out. Guys, we're coming towards the end of the stream, but before we go, I do want to remind you, remember, we are doing our $500 Bitcoin giveaway. We had some link mishaps, but not to worry. Here is the link again. We'll drop it in the chat. We're giving away $500 in Bitcoin. All you have to do to enter the giveaway is click the link that's being dropped in the chat right now. It will connect you with one of our team members who will get you added into the raffle. So click this link right here. It's right in front of Ivan. Click this link, and then somebody will connect with you and get you added into the giveaway. Ivan, Frank, thank you guys for joining me on the show today. Before we go, if you guys want to check out Ivan's channel, he has his own YouTube channel, IvanFX. We'll share his YouTube channel link as well. Thank you guys for tuning in, and we'll see you back on the next stream. Have a great rest of your day, everybody.
Thanks for having us.
Thanks for having me.
Too, because I think our domain.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And remember, if you open a $1,000 or more trading account with 8cap, you'll receive a free copy of the EdgeFinder. Click the link in the description below to find out more. From all of us at A1 Trading, have a great day, and we'll see you next time.